Tokyo, Reuters, world stocks extended a sell-off on Tuesday as escalating trade tussles between the United States and other major economies steered investors away from riskier assets, with markets in China bearing the brunt of investor anxiety. Spread bettors expected European shares to open slightly higher following the previous day Euro trademark S sharp losses, with Britannia Euro trademark SFTSE gaining 0.25%, Germania Euro trademark S DAX rising 0.35% and France Euro trademark S CAC climbing 0.25%. The tense atmosphere lifted demand for safe haven U.S. Treasuries and kept the dollar on the defensive as financial markets worried about the wider global economic fallout of the Trump administration Euro trademark SA Euro or America First Euro trademark agenda. Asian equities were lower across the board after Wall Street tumbled, with the S&P 500 and Nasdaq suffering their steepest losses in more than 2 months overnight. MISI Euro trademark S broadest index of Asia-Pacific shares outside Japan fell 0.27%. Hong Kong Euro trademark S Hang Seng retreated 0.2%, the Shanghai Composite Index slid 0.8%, and Japan Euro trademark S Nikkei was down 0.1% after trimming most of its earlier losses. Tech-heavy indexes such as South Korea Euro trademark S Kospi and Taiwan Euro trademark S weighted index fell 0.45% and 0.55%, respectively. Taiwan Semiconductor Manufacturing CO was down 1.8%, South Korean chipmaker SK Hynix Inc. lost 1% and Japan Euro trademark S Tokyo Electron was down 0.6%. Chinese tech giant Tencent Holdings shed 0.3%. Asian tech shares slid after U.S. peers, which derive much of their sales revenue from China, took a battering overnight. Sparking the drop in tech shares and souring broader sentiment was a report on Monday that the U.S. Treasury Department was drafting curbs that would block companies with at least 25% Chinese ownership from investing in U.S. tech firms. Unlike the seemingly spur-of-the-moment tweets by President Trump and the retaliatory exchange of tariffs, Washington Euro trademark S bid to protect intellectual property is an issue at the heart of a trade row between two powers battling for future global supremacy Euro wrote Yoshimasa Maruyama, chief market economist at SMBC Nikko Securities in Tokyo. Besides the trade dispute with China, the United States has recently raised the stakes in a challenge to the European Union by threatening tariffs on cars imported from the bloc. Increasingly hawkish trade rhetoric the United States is employing could begin impacting the economy by cooling investor sentiment and curbing capital expenditure by corporations said Masahiro Ichikawa, senior strategist at Sumitomo Mitsui Asset Management. Euro trademark S turning out to be a long-term bearish factor for the financial markets, as the United States is unlikely to back down at least through its midterm elections, in November. Euro. The dollar index against a basket of 6 major currencies dipped 0.1% to 94.202 and was headed for its 5th straight day of losses. The greenback was pressured as long-term U.S. Treasury yields declined to one-week lows as prices rose on heightened risk aversion in financial markets. The euro added to the previous day Euro trademark S gains and reached a near 2-week high of $1.1722. The dollar was down 0.3% at 109.460 yen, having fallen to a 2-week low of 109.365 on Monday. The yen often attracts safe haven bids in times of political tension and market turmoil. Brent crude oil futures were up 0.15% at $74.83 on uncertainty over Libya Euro trademark S capacity to deliver on exports commitments. Brent futures had fallen 1% overnight as receding investor risk appetite weighed on commodities. O/R. Oil prices were capped after OPEC and its allies on Friday agreed to increase global supplies, albeit modestly. Trade concerns kept copper on the London Metal Exchange near a 2-1/2-month low of $6,702.50 per ton brushed on Monday. Spot gold shed 0.1% to $1,263.62 an ounce.